Hi, welcome to the Market Alert for Thursday the 18th of August 2016. So yesterday we had a sell signal from the start, and after this managed to grind its way down to the scalp, sent out a note to say forget the rest of the day, as it was likely to be sideways with losing trades. And here we have the first of those that followed shortly after, before we went into the quiet session. And as I also said in my note, expect the market to move higher, which it did. And then we get into the FOMC minutes, so neither of these signals would be valid if you were still trading it at this time, because we're waiting for the announcement. The announcement comes, you can see the spike there, and then the market goes sideways once again. So the classic pattern for the FOMC minutes of late, this seems to be what happens. The market's marked down sideways and then they move the market back to the upside. In the daily chart, you've got this sideways coiling of the market. This is energy building, ready for a move, I would suspect, to the downside because of the lows in the implied volatility, which we'll look at in just a moment. News-wise today, well, we've got Dudley being wheeled out. It must have stopped him going on his holes. He's going to be speaking at 5 minutes past 3. This should give the market a bit of impetus to the upside, because Dudley seems to be advocating another rise in US interest rates at the moment. And if this is the case, then we can expect some real carnage after the live FOMC meeting. I think it's the 15th of February, when we will hopefully, with a bit of luck, see interest rates go up. It will certainly be interesting to see what Yellen does decide to do. But if she does go with that, then there will be absolute carnage in the markets. And then finally, the implied volatility is working this morning, 941 for yesterday. 910 is still the recent low of the 15th of August. And again, you can see it's just sideways, again, building energy in the implied volatility as well. And just to leave you with this thought, Rothschild, this is the greatest experiment in monetary policy in the history of the world. And it is an experiment. I've said this for a very long time, that it is a grand experiment by central bankers who have not the slightest clue of how this is going to end, except to say that it's going to end badly, because you cannot continue to print your way out of debt. It is impossible, especially when 11% of the debt now is in negative rates, and that's only going to get worse as these complete well, there isn't a word really, well there is, but it's too profane, as they continue to go negative on rates and move rates lower. It's just going to make things far worse, and then it's going to be the knock-on effect all the way down through the middle classes. But that's another video and for another time. So today expect the market to be first half an hour to an hour with some activity. Thereafter expect it to be sideways, as we're still in the holiday season for most traders and also bankers. Right, that's it. I will see you in tomorrow. Thanks for watching. See you in the next one.